Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club Daily Deal Review. As a reminder, the Daily Deal Review is where we take previous guests and we go deep into one deal. Very quick, goes by, well, the goal is 5 minutes, but we never hit that goal. 5 minutes is the goal, though. Today we have Darren Smith. Darren recently was on an episode, maybe one or two behind this. He goes deep into industrial, building his business out in Colorado and Pennsylvania. So if you want a little bit more information on industrial, check out that episode, one or two behind this. But today, Darren is here to talk about one deal. So Darren, where was this deal located?
This deal is located in Chambersburg, Pennsylvania.
Chambersburg, Pennsylvania. Love it. And what type of property was this?
It's a 23,000 square foot light industrial warehouse.
Light industrial warehouse. Go a little bit deeper into that. What is there any difference between a light industrial warehouse and other type of warehouses?
Probably not, because if you get into more of the heavy industrial, now you're getting into more manufacturing and that type of thing. But it's just a nice metal building, metal roof, 20,000 square foot warehouse, a couple of bay doors, drive up, drive in, and then a 3,000 square foot office.
Love it. Light industrial warehouse. All right. So how'd you go about finding this property? This
was actually one of the rare properties that I purchased off of the MLS. That said, It was a relationship type property because I got it by working with brokers and just networking and meeting with as many as possible.
Nice. And that is something that I try to repeat as often as I can for anybody who's getting started in real estate. Real estate is a relationship-based business. You got to go out there and meet people. The more people you meet, the more relationships, genuine relationships you build, the quicker your business will grow. And frankly, the more fun you'll have. So you found this on the MLS through brokers. Love it. I just lost my question. If everybody listening, I'm going through a sheet and I always lose it on my screen because it's way too big. So what type of property was it? How'd you find it? There we go. How did you price this property when you went and you bought it?
The property was a listed property, so it already had a listing price. I think the original one was 1.75 million, and just through negotiations back and forth through the process, we ended up at 1.65. And how I determine that was, whether a good deal or not, it's very easy on commercial ones a lot of times, because you can go back and look at the P&Ls, the profit and loss statements for several years, and determine, does this cover the debt service?
Yep. Makes sense. What debt service do you guys look for, or debt service coverage ratio?
So if you're using a bank for any of your properties, which I use for a lot of mine, it's a 1.2. So that means for every $1,000 in payments, the property has to have a net income of $1,200.
Perfect. Love it. So what about this particular property really got you going? Why'd you want to buy it?
This one, there were a lot of things I liked about it. As with most properties, though, the situation with the seller and the financing is really what kind of got me excited about it. And I won't get too deep into that, but It was a newer property. It was built in 2006. It was in excellent condition. It had a long-term government tenant in the building. It was in an area that was, up and coming, and had other things going on around it, a lot of industry, and so it seemed like a great one I'd love to buy. And it got me really excited because this was the first real commercial deal that I was doing. I mean, I was really going out of my wheelhouse with this one, and that kind of made it more exciting as well because I learned a ton through this process.
Nice. I love it. So how'd you go about financing it?
This one, it ended up being a 70% bank financing and 30% seller financing as a second. So I literally put zero into this one. I will tell you, I had to talk to a lot of banks to find one that would be willing to allow those terms. Most of them want a minimum of a 10% down payment on. And I would say actually now after COVID, all of them do. So anything I'm looking at now, I assume I'll be putting 10% into it.
Interesting. So you got the seller to finance the down payment.
I did. They financed the entire down payment. So I got into this building for a total of about $60,000 in closing costs.
Wow, that is awesome. I love it. So how'd you go about adding value?
There was very little value to add, other than I think I may have put 5 to 10,000 of just little things that the tenants wanted, but it was already in such good shape. So the real value in this one wasn't to the building. The value was what I could do for the seller. They were looking to take their money and move it into other things, and so the value add was getting the deal done for him, where he could have that money in time that he needed for his other businesses.
Yep, makes sense. And it sounds like you guys are still holding this, but there's always an exit strategy, and buy and hold is one. So how'd you go about exiting?
Yeah, so this is one I plan on holding for a long time. I do all of my holds for 7-year minimum terms, for the fixed rates to try and make it through the ups and downs. So once, if we make it to the 7-year mark, which I anticipate we will, holding this one, by that point you have also paid down enough of the property. So even if it doesn't appreciate, you now owe less than what the first mortgage was when you started. So if I have to refinance out and pay the balloon, because both payments are on a 20-year amortization, if I have to pay off the second at the end of 7 years, I can just refinance with the bank, pay off the second, and then now I only have a first on the property.
Perfect. I love it. All right. So you don't have to have exact numbers, but just high level, what were the numbers going into this?
1.65 million was the purchase price. The gross income on this one was around, I think it was like 215,000 a year. And
Wow.
then again, I'm reaching a little bit here, but the net income was around like 135, 140,000. So not a ton of cash flow on this one. You gotta think I'm financing 100% of it, but because I had 4.75% on the first when I purchased this, the rates are a lot lower than that now, and I think I had 4.5 on the second. It does allow about 2,000, 2,500 a month of cash flow. Not a lot for a $1.65 million building, but it was enough that I felt comfortable with it based on the age and the condition of the building. That's not something on those small margins. You wouldn't want to be doing that on something that may need a lot of upgrades or a lot of work, that type of thing. But when you add it all up, I'm $60,000 into the building to buy the thing. And last year, according to my tax returns, I made a net profit of 90,000 on that building between principal pay down and the cash flow. And so that's a great return no matter how you look at it. And then if you add in depreciation and appreciation, we're about to actually redo the leases on that one, increasing what they're going to be paying. So very, very happy with how that turned out, especially for a first industrial deal.
Well, yeah, I love it. And so wait, is this a single tenant?
This is a single tenant building. Yeah, it's the Army Corps of
Wow.
Engineers actually,
Huh.
which I mean, I'm not going to say this thing was all roses. There was definitely, it was a 9-month process even buying it.
So before you jump into that, the last question,
Oh, go ahead.
I just gotta say it is, what was the biggest lesson you learned? You were just
Yes.
going into that. Take it away.
If I had to say biggest lesson, it actually goes into the thing that went wrong was you better make sure you're well capitalized no matter what you do. I did not, the rent that they pay every month on this building is over $17,000. They didn't pay a single rent payment for the first 7 months I owned the building. And that was because of dealing with the government, getting in their systems, getting through the payment systems, all of that.
Wow.
So you got to expect everything you do, is going to be hard. There's going to be stuff that's going to come up. And, if I wasn't able to float that for the first 7 months, that would have been that could have taken the whole thing down and ruined the whole investment. So that's the biggest lesson learned is, make sure you're capitalized. I mean, having 6 months of your expenses planned out, I know not everybody can do that every time. You got to take some leaps here and there, but do that whenever you can, and you'll put yourself in a lot better position to be successful.
Wow, it took 7 months for the government to get that into the system. That is just crazy.
Typical.
It's a good story. Awesome. Well, that is the Daily Deal Review. So I appreciate you coming on here and telling us about that light industrial.
My pleasure. Thank you very much, Gabe.
And for everybody who's here with us today, thank you guys for showing up. As always, we appreciate having you here. If you guys have any questions, reach out at gabe@therealestateinvestingclub.com, or just check out our website, therealestateinvestingclub.com. I'll also put Darren's URL in the show notes, so you can click the little more in the description and click through, say hi to Darren. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.